Awesome. Well, nice to meet everyone. Um, I thought I would do my regular talk about how to, pitch to investors or what you need to raise money. But, I do these workshops at Stanford every couple of quarters. And I thought it would be interesting for you guys, especially those people that are trying to raise money. How many people are working in a startup, on a startup? Okay, good. Well, I also want to thank Octopulse and Savannah who actually agreed to be part of the workshop. So you're going to get a gift from me. You will see. Okay. Anyways, this is me. And I want to tell you a little bit briefly about my bio. I was born in Spain and I came to Stanford 3 decades ago. So that's how old I am, to do my PhD in electrical engineering. And I started two companies, Barcelona Design, Savio Labs. I was an EIR at a venture firm called Foundation Capital. And ultimately, I started my own firm. Originally, it was called Pejman Mar, and now it's called Pear VC. And, I have a family. I think some of you may know David, who's a student here. He's a junior in ECE. My other son is actually works at LangChain, so, working on agents, and my daughter is still in high school. But anyways, I have a life aside from work. And this is what I like doing. I actually like running. So I always go on races. I last July, we did the San Francisco Marathon with a bunch of my founders, and that was super fun. And I like hiking. I also like quilting, which is the most mathematical kind of art. And that's kind of de-stress. And, I like music. This is a recent Bruce Springsteen concert, which my kids would say it's a very boomer concert to go to, but I had a good time. All right. And I also have been teaching for the last 20 years. So my first 10 years, I taught analog circuit design. I don't know how many ECE people are here. Anybody? ECE? No? Well, that's kind of a, not party that doesn't work well for cocktail parties, but now I teach this class called Lean Launchpad. I've been doing it for the last 10 years, and we just had our final presentation yesterday, so that's why I had to take a red eye. But we work with 8 teams every year, and they start at 0, and over the course of 10 weeks, we help them start a company, and it's very impressive. About half of them will go on and raise money and so on. So anyways, that's what I do, and I love teaching. And just 2 slides on Pear, early stage. We're early stage fund, which means we invest before there's product market fit. So I help people find product market fit. That means define the product, figure out the customer, go through pivots, co-founder drama, all the things that happen that are messy. And, I think we actually have a lot of companies that are worth now over $100 billion, Doordash, Dropbox, AppLovin. You probably know some of these. And this is my partner, Pejman, and co-founder. Okay, so we're going to start now with the pitch deck. I want to tell you that the pitch deck, there's so much information online about how to build a pitch. You probably millions of hits if you do it. I put here all the sources that I use. I recommend using the Sequoia deck template and modify it. I did a couple of modifications that I think are important. And that's what this whole talk is about, how to actually build your deck, starting with that. Okay, there's a lot, but that's the only one that if you don't have time, which I think if you're a CMU student, you probably don't, you should just go and check on the first link. Okay, so what is that template? This template looks like this. I'm going to cover everything. And now I will share the slides, so you don't need to take notes. But basically, there's a bunch of sections. And then for each section, you have to answer the question very succinctly. And in this presentation, I'll go through every point and give you some examples. The most important for you guys is that how many people have raised more than $1 million? 1, 2. Okay. How about more than 3? More than 500? I guess I should have done it the other way. Okay, not much. If you've never raised money, at the beginning, there is nothing. You guys have your idea. There's no product. You may have a prototype. Typically, there is no customer. So the only thing you have is you. So you have to be really good at storytelling, okay? And storytelling is very simple. It's been done for thousands of years. And the best stories are the simple stories. And if you watch a movie, they work the same way. You introduce the characters. There is a big problem, and the company comes to save it. You're the hero, So And then from there, you say how you're going to solve it. So I don't know if people have taken kind of creative writing classes or anything like that, but if you haven't, that they're helpful. The other thing I would say is if you have not taken a public speaking class, I assume CMU has public speaking classes, you must take one of those classes because it's super important to be able to speak to not just investors, but customers, people you want to hire, the public markets, et cetera. So don't graduate without taking that class, okay? All right. When you are presenting to an investor, it's much more than just telling a story. You actually have an opportunity to check a bunch of boxes, okay? And what you're trying to do is actually demonstrate that you know a lot of things, right? So maybe you don't have any customers and you don't have a product, but you can come across as somebody that knows the customers really well, that knows the market. You can come across as, the team that was born to do this company. You can show that you're action driven and can get things done. Basically, you can demonstrate all of that. And that gives confidence to the investor to give you money, right? Sometimes the same pitch given with slightly different words, et cetera, doesn't get funded. So you'll see what I mean in the next few slides. The investments run on FOMO. People have heard the word FOMO. Great. And basically, investors feel sometimes the way you want to leave an investor is the investor thinking, this company is going to happen, it's inevitable. And if I don't invest, I'm going to miss out. That's the only feeling you want to leave these people behind, right? And if you do that, then I think they'll fight to actually invest in your company. But it's really hard to prove in a small deck that your company is inevitable. And I think you'll see at the end of the presentation, I'll come back to this point. Okay? All right. All right, so let's start. Now I'm going to go through that template one by one and give you some examples. Okay, company purpose. So the company purpose is, what is the vision of your company? One short line, declarative sentence about the company, not the product, about what your company is about. This is perhaps the hardest thing to do, but it's what differentiates amazing founders from okay founders, because the amazing founders have a vision for the company. They're not just thinking about the product that they're shipping in the next 6 months. So, let me give you some examples of companies that you guys know. So this is, Airbnb, probably most people know, but book rooms with locals rather than hotels. I think it's pretty simple, right? And this is on their first pitch to folks. So, anyways, YouTube, broadcast yourself. This is the first pitch that they, their seed deck equivalent. Or Dropbox, moving the world's files. You can see that this sentence is not just about what I'm building today. It's not like a website for watching online videos. That's not what it is, right? It's like a bigger vision that makes people, oh, this could be amazing or whatever. Anyways, so important, declarative sentence. Okay, second, you have to talk about the problem. I think this is the biggest mistake first-time founders do. They assume that everybody understands the problem because you've been working on it for so many months or years, maybe. So of course, you think everybody's like you. But the truth is, investors don't know every industry. They might know some industry because they worked on it or they had a company, but most of us don't know every industry. So your job is in the problem section to basically dumb it down. You want to paint this story about, hey, this industry has a problem. Let me explain to you why. You can go into details and be dramatic and tell almost a story of suffering of your customer, right? That's where you can, some people have pitches that have personal stories and they make it very dramatic. It's okay, that's good. You want to really explain to somebody what is the problem. Don't skip this section, okay? Not the one to skip. Okay, this is also an opportunity to demonstrate that you know your customer. So you're telling the story of the customer. You can say, I've talked to 50 people and 50 customers, and they all tell me the same thing, or I hear it all the time. Just a small thing to say to prove to your investor that you actually know the customer. Okay, so this is the problem section for Dropbox, which, is very simple. Storage is a mess. It was This was a long time ago. Maybe you guys weren't born, but 2007 is still a pain to do all of this. And one thing that they do, which is really interesting, is they add what other people are doing today. What do you think this slide replaces in some cases? Competition. So sometimes people insist on having a competition slide, which is a 2x2 or something, whatever it is, a big list of features. But you can weave it into the problem section. And it's a natural way to say, hey, of course there are solutions, but they don't work because of what I just told you. And it's a much more convincing way for an investor that is listening to your story than to go at 2x2. Okay. This is a company called Front. You may not know it. It's a big company and it's used in businesses when you have a big business and customers are emailing you and you may have multiple customer support people. There's a common inbox. So their problem was, hey, this is a few years ago, 10 years ago, so it's probably more now, through 150 billion emails per day, and half of them are emails, business emails. And, it's growing really fast and people don't know how to handle it. Okay. All right. So now is the solution. The most important thing here is that if you've told your problem on a certain way, the best way to tell the solution is to actually match them. Don't be worried about being kind of what I call too cute. That is perfect because investors, again, need simple stories. And, we don't have time. So we want 30 minutes, we want to get it really quickly, right? So if you tell the problem and you said, hey, it has these 3 problems, your solution should be, I'm building this and I'm tackling this problem, this problem, this problem, and people get it. Okay. So that's kind of what you have to do. Okay. This was Dropbox. Actually, if you counterpose problem and solution, it was kind of the perfect opposite. And they have a demo. I want to make a comment about demos. It's easier to put screenshots and add a link to your video if you want to do a video. Because, a lot of us are on planes and then we want to watch the demo and it doesn't load. And I'm only going to watch a deck once. I'm only going to open it once. So if I can't watch the video, then I guess I didn't watch it. So it's better to have 3 or 4 screenshots marked up. And then you put a link and, I can go see it later if I'm really interested, right? So important for you guys. Some people add looms. I don't know has anybody done a loom video for their product? Okay, I think those are really useful in diligence or when you send a deck. So you record yourself explaining the product. And if people are interested, they can go there and in 2 minutes, they see you talking about your product and you go into the detail. I think those are very, very helpful. All right, I'm going to skip this. Okay, why now? The why now is really important. There's always a why now, okay? And obviously, I think, I believe the best companies have some reason they existed at that time, because as humans, we're always thinking about when to start, what companies to build. But there's a right time for these companies. Gotta get the timing right. So, why is this company possible today? Sometimes it's technology. So right now, every company that comes to me is because of generative AI. So I have to dig in a little more, but that's the main reason right now. Sometimes it's platform driven. So for example, TikTok grew a lot and there's a lot of companies that have been created to support that platform. So, like ShopMy or some influencer software or, kind of this generative AI influencers, they're all on TikTok, right? So those are tools that are based on that platform. And one of them is regulation changes, okay? And this could be, well, I had this slide a while back, so it's climate incentives. Now it's like how to get around the fact that there are no climate incentives would be the reason of why do it. But there's always a reason, and regulation is actually really, really good reason. Okay, let me give you some example. This is the why now for Dropbox. 2007 is like 200 years ago for you guys because tech, so 20 years is 200. We didn't have as much computing or as many mobile devices. The iPhone was not out, or maybe it was just out. So for them, it was like, hey, a lot of more people have mobile devices. So there's a way you need to access your files. And, bandwidth used to be really expensive. Now it was really cheap. It didn't used to be the case where you would go to some cafe and there was just internet, although it was like a desert. But now, it wasn't the case. This is Uber's why now. So for them, they were able to do Uber because of phones. You know, the presence of smartphones allowed them for you to communicate with these drivers, and they could track where the driver was, etc. So they had a chart that basically talked about smartphone penetration, and you could see that over time there was more phone penetration, and that was the reason to do it. Okay, this is one of our companies. They actually help sell software to installers, solar installers. They put the solar cells in the roof. And they came to me in 2014 and they said, hey, the price of the solar cells is actually going down. It's gone down dramatically to the point that it's now affordable for consumers to add them to the roof. And there's going to be need for software to do that. So that's a reason this company should exist. Okay, market size. Great. Market size is really important. Okay. And venture companies need very, very, very large markets. So if you have a fund that is $1 billion, okay, you're going to need companies that have markets that are at least $5 billion. Okay. That's the only way you can return the fund, because a fund will invest in your company. They might own, let's assume they own, it's amazing, and they own 20% of your company. That means that when the company exits, they will make $1 billion, right? So they can return the fund. So that's great. That's great for their investors. But let's assume your market is $1 billion. They get 200 million, but their fund is $1 billion. So they'll never return the fund. Okay. So you need a big market if you're going to a big fund. If you go to a small fund, you don't need a big market because they can return the fund if you exit at $1 billion or a few hundred million. Yes.
Don't you think that maybe it's more important how it's going to look like in 10 years rather than now?
Yeah, absolutely. It's the exit. The only thing that matters is what's the ownership at the exit, right? If you're telling me that the market is going to exist in 10 years and it doesn't exist now, then you're giving me one more thing that I need to believe. It's possible, but I have to believe that too. So you have to be good at convincing me that it will exist in 10 years and you have the timing right. But it's possible. Yes. It's only the exit that matters. The reason I say this is because many times what happens to companies, and this is important for you guys as students, not all companies need to be venture backed or venture backed by big firms or anything like that. So you have to understand what your market size is and then decide how you will finance the company. If you go the venture route, you're committing to big company. Okay. If you don't, and you can raise angel money or raise from smaller funds, then that's okay. All right. But from now, I will assume everybody's a venture backable company. There's only one way that you can convince us, me anyways, or I would like to say good seed investors, that you have a big company and it's using bottoms down math. Okay. If you use top down math, doesn't really matter. We don't believe it. It's just like a check. In fact, you will be surprised. I think the 2 decks I have talk about TAM and SAM and SOM and so on. We actually ran a survey with a bunch of investors and we asked them, do you know what TAM, SAM, and SOM are? And the results are this. So basically, no, people have no idea. So only they just don't even understand the words. So it's useless for you guys to put those numbers. They're going to completely ignore that slide. Okay. The only thing that you have to say is, how many customers, how much revenue per customer? Okay, that's all that matters. And the way you do that is you have to figure why. Okay, I'm going to give you a couple of examples. So one company is Medallia. They have, this is a little old, but they have about 800 customers and each customer pays them $500,000. So their revenue is about $460 million. Okay. And then you have companies like Facebook. This is a while back. Okay. They have 2.7 billion users and each user is for them $11 because they can sell their advertising. And it's a 75 billion, they could make $75 billion in revenue. Okay. Those are two different companies. And then maybe let's pick a middle company. Maybe like Yelp. I actually didn't put the numbers for Yelp. Maybe anyway. So let's assume the prosumer company, 1 million customers. It could be Yelp. 1 million customers, $400 per customer, 485 million. total revenue, okay, the market. Okay, if you are Medallia, what can you do to sell your product? How would you build your sales team? Or would you build a sales team? Yeah.
You're specifically targeting enterprise, so it has to be very expensive deals to
Exactly. Very expensive deals. So do you think like when you're closing a 500K deal, do you think Medallia takes you out to dinner? Yes, right? They take you to a very nice dinner, okay? You and the people in your team, and they really want you to close that deal. Do you think Facebook takes people to dinner? No, you cannot build that sales force, or Yelp, they need a different type of sales methodology. So you have to figure out where you are in that curve because it determines what type of sales you can do. The rule of thumb for you guys to know, if your price on a customer is below 25,000 a year, you cannot afford a salesperson. You need to find another way to acquire customers. So this is a very important number for you guys when you are building your company to keep in mind, okay? All right. Let's assume you do all the math, what I just said, number of customers times the amount of money for a customer, and it comes out to $1 billion. You have product A, and it's only $1 billion. And you're like, shit, I cannot go to a big fund like Sequoia or whatever to raise money because my market is small. You have to think then, okay, can I sell more products? Which would be like, hey, maybe I can do a second product for that same customer. And that's product B and double my market. Maybe you can. And actually, it's really good because if you sell something to a customer and they're your customer and they're happy, it's very, very easy to sell them another product. Okay, so that's good. Might be that you can't do product B and you actually have to go to another customer segment. Okay, you can put it there. That's more expensive because you need to go figure out now how to get the other customer, right? But you can tell this story if your original number is small and if it's true, right? Sometimes people make the mistake of telling the whole story about one, but this market, and then, they find Y, which is like, I don't know, 1,000 miles away from X, and it's not believable, right? It has to be somewhat believable that you can do this. All right. Okay. All right. Okay. This is the one that I added to Sequoia's deck, but this is perhaps the most important thing when we evaluate a business is does your product deliver enough value? Because if it delivers enough value, then you can charge money for it, right? So remember, you're a pre-seed company. You come to me and you say, hey, there's this many customers and I'm going to charge them 100K each per year. My question as a seed investor is, can they charge 100K? Can they charge ever 100K to this business? What's the way to charge 100K? What would I have to do? Anybody wants to take a guess? Yeah.
The ROI for the customer has to be $1 million.
At least $1 million. That's right. I have to deliver $1 million of value because roughly I'd be able to charge 10% of that. Okay. And if I don't deliver $1 million of value, then I'm not going to be able to charge 100K. All right. So this is very important. Yes.
Now, what about the budget of the customer? Do they have?
If they don't have the budget, they'll never pay me 100K.
Yes.
So no mark. I don't believe the company.
Yeah.
They have to have budget. I hope I answered your question, but sometimes, it's true. Like you go sell your product and the company tells you, oh, we have no budget. It's not a priority. I like your product. I love your product, but I can't convince my manager. Okay. That means you have no product market fit because the only reason they will buy a product from a startup that has 3 people and the product is crappy and has all these bugs is if they're desperate and if it's their number one problem. And if they don't have that problem, then you should work on something. You should ask them, tell me what's your budget spent on, because that's the product I'm going to work on. Yeah. Okay. So there's a couple of things of value. There is one way you can, especially generative AI, a lot of companies are in this bucket, is like efficiency. So, hey, I can save you time, right? Or I can save people. So you can save time saved or labor costs, right? So you can use AI to reduce whatever time it takes you to ingest some forms, or you can replace the front desk receptionist. You can do all of that. Sorry, phone's ringing. The other thing you can do is revenue generation. I can increase your top line revenue. So maybe I have a sales tool that increases your top line, or I can lower your customer acquisition cost. I have a better ad system. I'm TikTok and I'm selling you ads that convert really high. That's good. Or I'm opening a new market or new channel for you to post. Okay. There's many ways. What is value that you deliver to a customer? Which one do you think you can charge more, like, money for?
Increase top line revenue.
Increase top line revenue. The only thing that moves people, especially if they don't have money, like an SMB, is if you sell a product that increases their revenue. It's much, much easier to sell a product that increases revenue than a product that saves time. Just think about yourself. What was your name again?
Sure.
Sure. Okay. I don't know what takes you time. Maybe doing your homework. Okay. I'm going to send you a tool, and this tool actually is going to save you, I don't know, 30% of the time you spend on your homework. Okay. That's tool one. Tool two, and I'm going to ask you to pay me $2,000 a month. Okay. The other one is I'm going to tell you, hey, I can find you customers for your startup, and you can close 2,000 in revenue every month for the next 10 years or whatever it is. Which one would you buy? The second one, because I'm going to build his business, and people care about their business more than about their time. We're really, really bad at counting our time. Now, if you're in a big company, when somebody has a title and their title is something like Doge, then they care about efficiency. Okay. But other than that, people care about making money. Okay. So that's for you guys to know. My rule of thumb is that if you're doing this type of business, the save time business, you need a 10x ROI. So you'll be able to charge 10% of the value to deliver. Okay. So if you say, this is a mistake people do. Oh, I am going to save 100 hours and, they are making $30 an hour. So, it's like 3,000. I'll be able to charge them $3,000. No, you can only charge 10% of what you save, 300. Okay. 10%. One second. For this type of product, how much do you think you can charge? If I increase your revenue by 100K, how much can I charge? Rule of thumb, roughly 30%, if you're a good salesperson. But yeah, you can get to 20-30% for sure. Yeah.
Can you argue, but can you sell the fact that efficiency is going to lead to higher top line?
Sometimes, but you have to prove it, and I think, it's always, I think this is an issue with companies. I think it's always easy, especially for founders. We build a product, we sell our own product. So when we find a customer is willing to get some money, we're like, oh, whatever money, just take it. You're my first customer. It doesn't matter, but it actually really matters, right? So it's easier to sell your 10%. You will have to spend more time in sales, convincing them that this is true, right? But you want to structure the deal this way so that your company's bigger and then your market is bigger. So when you go raise money from a big fund, it's believable. It takes more effort. And you can put together like POCs that demonstrate it, but you have to prove it. Yeah. Okay. There's actually a company out of here that's very old, 30 years ago, called PDF Solution. And they believe so much revenue generation that they said, we'll just take a percentage of whatever revenue increase you do. And people were like, sure. And, they went public. So it's a good way. Okay. This is WeWork. Obviously, they had some value proposition at some point in time. But it's good to have a quantitative version of your value prop. And for them, it was like, hey, we're going to save you 25% of your rent if you work at WeWork. So that's, their value prop. But if you can, it's good to have that. All right. Dropbox example. All right. Business model. What is business model? Business model is how will you make money? How will you charge this? Who's your initial customer, etc. So anyways, we talked a little bit about that already. So I'll skip that. And I'm going to give you guys this. But this is I give you a couple of examples. It's very simple. For Airbnb, we take 10% commission on each transaction. That's a typical marketplace, right? So, well, they were kind of off by a lot. But, this is how many trips they thought they could do. 10 million, 10 million trips. They could do $20 per trip. It's 200 million. They have a lot more revenue today. But it's very easy to understand how you make money. So you need this slide. It has to be very simple. If you have a complicated slide about how you make money, people get lost. Okay. This is actually Facebook's seed deck. And this is how they make money. allows targeted advertisement on the basis of any combination of the following parameters. I think it hasn't changed that much. Maybe the rates have changed, but this is what they do. And they were making money from day one. You know, I think anybody wants to guess the revenue of Facebook year 4 of their life? Just 20 million? Come on, another person must have thought. 150 million, 4 years. That's pretty quick. They were selling ads from day one. Just wanted you to know. Okay, go to market. This is about how you will acquire the customers. We've talked about it on that curve of the market. So you want to at least, you know, in the pre-seed level, when you don't have product, when you don't have a customer, at least you want to communicate to the investor that you're aware that you will have to build go-to-market in some way, right? At least you should sound educated. That's all you have to do. You have some hypothesis and you think you're going to test it. Nobody's expecting you to have a figured out go-to-market strategy, but at least some guess that is somewhat reasonable. All right. Actually, this was the Airbnb go-to-market, which is we'll go to events. We're going to have some partnerships. They'll send us deals and we are going to advertise. We're going to go through Craigslist. A lot of people used to go through Craigslist. Now people go through Reddit to kind of hack their initial customers. So they would advertise on Craigslist. They put a post on Craigslist that would send them to Airbnb. All right. Actually, maybe this is interesting. I don't know if people know this. Maybe Dropbox is an old company, but they did a lot of customer acquisition. The founders are very technical. So they did this post on Hacker News and they did a YouTube video that went viral. And then they created, you know, a wait list. And wait lists are great for creating FOMO. So the more FOMO you have, then you tell people if you refer somebody, you'll go up on the wait list. So it's a way to, you know, acquire consumer companies if you guys are anybody here doing consumer. All right, traction. Okay, again, you will have very little traction when you raise seed, but there are things you can show under traction. So things that you can show are engagement, like at least you talk to customers and you heard quotes from them of what they like. You may have a prototype that somebody has put their hands on and you can put a quote. But by the time you go and raise a bigger round, you'll need to talk about some of these things: engagement, I'm gonna hurry up, unit economics, retention, etc. I have to hurry up or we are not gonna finish. So I'm gonna like move forward and we'll come back. I wanna spend 2 minutes on team and then we'll do our exercise. Team, because there is nothing, no product, no customers, it's just team. This is the most important slide of your deck. Okay, so really important to nail this slide. It's not just logos. Everybody here went to CMU. You already have like a checkbox, right? Everybody's great. So what makes you different from the other CMU team next to you? All right, so this is the Dropbox slide. Read it and then tell me, what do you see? What can you tell out of this slide? What does this slide tell you about the team? Yeah.
They are very passionate and good about coding.
They're good about coding. They're really good about coding, right? Okay. And it was hard to get a job at Google at that time.
They build stuff.
They build stuff, right? I'm like, wow, these guys are doing stuff. They're great at coding. What else can you tell me?
They're friends.
They're friends. And some slide that it looked like they're moving or something, right? So there's a lot of information in that slide that when I get 4 beautiful pictures with logos, I don't know. So think about something amazing that you've done or that, you know, kind of says something about you other than, you know, I had a great internship and I went to CMU. Doesn't matter. There's thousands of people like that. Okay. All right. This is actually for PayPal. But again, what can you tell about this? Read it for 1 sec. Anybody? Anyways, yeah.
Yeah, I think it's they're confident about getting money. I don't really care about the slide that much.
No, this is a good slide. This is a good slide. Listen, I think this and I'm like, wow, you were the one of the first engineers at PayPal. I need to talk to you. And you're working with 2 other PayPal people, one of which was recruited by Max Levchin. I need to talk to you. This is a very good slide. Okay, this is Intercom, which is another slide. I don't know if people know what Intercom is. It's like kind of like a little chat bot for businesses. But again, I put it here just to give you an idea that this is one part of your idea, but what special about you is the most important. All right, competition. I'm not going to do competition because I want to get to future. I'm going to give you guys these slides. What is the vision of your company in 5 or 10 years? It's important to end with vision. Where am I going? Okay, so super important. You can say like, hey, this is not all, I have this product, but this is where I'm going. Okay, think of Google. They did search, but now they have so many products. Okay, that's what you have to think. This is a good example of like vision. Slack proved that businesses are ready to go to buy good communication tools. They're going after the internal communication market. We're going after a bigger opportunity, the external communication. So you leave with something big. Okay, I'm going to skip financials. And we're going to go to DEX. So this is where we're going to go. What is Octopulse? All right, Octopulse is volunteered. They're going to talk for 5 minutes. We're going to listen to their deck. And then I'll come back on stage. Oops. I don't know. Thank you for doing it.
No, thank you.
Well, we have to keep it at 4 minutes. Or
Cool.
5.
Okay.
No attendance.
Ready? Hi, everybody. My name is Paul Grech, CEO and co-founder of Octopulse. With my parents being from 2 islands, the ocean is like a second home, with many of my special memories being in and around the water. However, it pains me to know that by 2050, the oceans as we know it will be unrecognizable unless major intervention occurs. Overfishing is one of the chief contributors to this factor, with decades of increased demand, lack of regulation, and improvements in technology having pushed global wild fish stocks to the brink of collapse. Aquaculture, or fish farming, is the sustainable solution to reduce the pressures of overfishing and allow ecosystems to recover. However, farms need improvements in technology in order to sustainably grow to meet the growing demand for seafood. Over the last year, we have met with industry experts to explore the key pain points and the opportunities to develop technology. Through this journey, I went out to Blue Ocean Mariculture, the largest offshore producer of yellowtail in the US. I got to meet the leadership team, tour the hatchery, and see firsthand how manual and stressful the process of inspecting juvenile fish for deformities before they're cleared to go to the grout pen is. And it's so important because 70% of cost industry-wide is spent on feeding those fish to harvest. For Blue Ocean, the process looks like this. 400,000 tiny fish are anesthetized, pumped onto a table, and 8 to 12 technicians spend an entire week inspecting each fish one by one. This is so important because any fish that makes it through with deformities means that less revenue is earned. We validated that this is not just isolated to Blue Ocean Mariculture, but is experienced across the industry. And while all operators we spoke with validated that this is very stressful and labor intensive, it is required for their overall success. They just wish that there was some technology that could be implemented to help alleviate this stress.
And this leads to our solution. This leads to our solution, which is a computer vision-based system that is designed to detect and analyze fish species and provide fish monitoring across an aquaculture farm by leveraging image recognition and real-time data processing. They're able to provide this information to fish farmers. And this is essential because fish farmers need this information so they don't waste money, so they can reduce mortality rates and they can increase their efficiency and overall yield in aquaculture operations. The way we plan on integrating the computer vision system into their current infrastructure is with these 3 modules that we've identified. Fish separation is the first module where they take the fish from the hatchery and actually separate them one by one. The second module is the camera module where we'll have computer vision. And our third is actually sorting the classified fish. So this leads to our initial prototype where we want to augment the technicians by increasing the accuracy and efficiency through this box where fish will be placed in here. It'll also allow us to collect data, which is very sparse in the industry right now, and enrich our computer vision model.
Based off of our conversations with Blue Ocean Mariculture, the expected value of automating this process is over $500,000, with 110 being in labor savings alone. Through our AI inspection system, we'll be able to reduce the overall time it takes to complete this process and allow for more healthy fish to make it to harvest, while also freeing up technicians to perform other mission-critical tasks. The global finfish industry is valued at 100 billion and growing, and the subset called precision aquaculture, where technologies such as AI and automation sits, is valued at 30 and continuing to grow. We are targeting mid to large farms in the Americas and Mediterranean, so around 3,000 or 4,000 farms, because they are growing newer species of fish that require more improvements in technology because of the amount of deformities that they experience. Plus, many of them are still trying to achieve profitability. So they're very open to partnering with new technology. Our team came together through our shared passion for protecting the ocean, and our cross-functional skills in AI, robotics, and relationship management will be key to our success. And we are also supported by 3 industry and technology advisors that have deep experience that will help us to deploy our pilots and build towards commercial launch. This summer, we are going to be piloting with Blue Ocean Mariculture, as well as 1 to 2 other fish farms, which will lead up into our year 1 of commercial launch. So around 3 farms, 6 or 18 cohorts, 282,000 in revenue. By year 4, we're expecting to cover 532 cohorts, $8.3 million, which will allow us to begin R&D into the offshore pen, where I mentioned is 70% of the cost is going industry-wide. This summer, we're looking to raise $300K from accelerators to help us to deploy and validate our pilots. We're focused on ocean, deep tech, and climate tech accelerators because of their network and their ability to help us to scale. And then our strategy is leveraging these pilot success stories to convert LOIs into commercial contracts, as early 2026 is when we expect to commercially launch and begin our pre-seed raise. Thank you, and any questions?
You can stay. Thank you, guys. You can stay here. You can stay here. Or you can, anyways. Let's see Allison. The Allison to switch it.
Just questions in the chat.
Yeah, it's just comments on theirs, which we have to go.
Okay, they're very brave. These guys are very brave, okay? So.
Hold on.
No, here, I'll
That's-
go up. That's at the beginning. Up.
Oh, so you, oh, I see your version. Okay. That's what I was confused
shade.
about.
Okay. Okay, so let me tell you what I did. The first thing I did is I took their deck, and actually they have slightly different decks. And I graded them, you know, according to my template. And there were a lot of things that were missing in the template. So I didn't really understand the quantification of the problem. I just said yes, but why now? Like, I didn't understand why this, I don't know actually. So by the way, I don't know anything about this business. Okay. So I don't know if there's regulation and the farms have to be more effective or have less waste. There might be, I don't know. Value prop, there is a number, but I don't know where it comes from. The business model is missing. Go to market, I saw the 500, so I'm guessing it's going to be direct sales, but I don't know. Team, I think you had one logo on aqua in the deck I saw on aquaculture. But anyways, competition, I didn't know anything about competition. There was a bunch of stuff that I didn't know. Okay. So then what I did is I said, okay, I'm going to do, I spent maybe an hour reading about fish farming, which I don't know anything about. So I have after an hour, I have a little bit of knowledge, and I said, okay, this is going to be my story. And I sorted it a little better. So what I'm going to do now is I'm going to give you their pitch my way. Okay. And then we can spend some time seeing what the differences are. All right. So hello, my name is Mar. I'm the founder of Octopulse. We're building autonomous aquafarming. Aquafarming is a 310 billion global market. And yet it's an incredibly manual task. Sorry, didn't update. Overproduction to overcome this deficiencies in farming, disease spreading, overfeeding, large waste is killing our environment. And tighter environmental regulations, higher farmer efficiency, demand a new solution. At Octopulse, we're optimizing aquafarming efficiency. And this is how we do it. Our system has a fish separator, state-of-the-art computer vision system that is able to detect much earlier than ever before if you have sick fish or not, or if your fish are growing, and then we sort them the right way. And we've built a software layer, and we've also built a prototype that is already working and tested. We've proven the value proposition. We can increase accuracy by 90% versus today of 70% accuracy of existing systems. This translates to 30% more revenue per farm. And additionally, we're saving 20% labor costs. Instead of counting the fish manually, we're actually just running them by our machine or our mock-up product. So what does it mean for a mid-sized farm of 3 million revenue? That means we're generating them $1 million in additional revenue. We're saving them $400K in labor costs. We're going to be charging 5% of their total revenue, of their top line revenue, which will be around $150K. And we already have a pilot in the works. We're in final negotiations for a $500K 6-month pilot with a very large farm, $83 million a year revenue in Hawaii called Blue Ocean. And that's not all. We have a very strong sales pipeline. We have interest around the globe in Mexico, East Coast, Portugal, and we're expanding to shellfish. And it's a total of a 3 million pipeline. Our go-to-market is very simple. We charge 5%. We have large contracts. We're building a direct sales force, and we're initially focused on these mid-large farms that had at least $1 million in revenue in the Mediterranean, I guess you guys said. Our market is huge and growing at $310 billion and 5% charging. We're a $15 billion company. We combine aquaculture, robotics, and AI knowledge. We come from CMU, which is the #1 robotics university in the world. And we've known each other since freshman year. I actually don't know that. And the competition is years behind. It's actually private equity owned. They don't know anything about technology. They're only using SaaS for back office operation. We're the only optimization that is focused on improving productivity. And we're going from computer vision to full automation. We are building the fully autonomous aqua farm of the future. We're asking for $300K to complete our final and initial POC, and we're planning to raise a $4 million round by late 2025 to reach 1.5 million in revenue at the end of 26. So we think this pre-seed is a really good opportunity for you to get in. If you want to take part in a $300 billion industry and save the environment, join us. Join us. Okay, awesome. Okay, so maybe you guys can, what are differences? Maybe I should say, are you convinced that aqua farm is a good business? Any comments? Just comments.
I guess the first impression is the slides are way more simplistic, right? Like there's not that much information. So it's sometimes we rely too much on like what we're saying, but your message is very concise.
Concise messaging, easy. Remember, people have no time. Easy messaging, because you don't use a lot of words, it forces you to think.
I like how the way you use all the photos, because a lot of people definitely haven't go to any farm before.
Exactly. What is aqua farming? I had no idea until 3 hours ago.
The image is really good.
All Google.
You did a different way. You you can convince us it's a huge, it's a big industry.
Yes.
There's high potential in it. And please, if you want to join this 300 billion industry and make money with us, you can join us. It's not just I'm seeking funding.
Exactly. Inevitable. FOMO. Anybody else? Yes?
I think the vision and the problem was presented as such a much bigger thing compared to the first one, and it is, and truly showed that this is a huge industry. The problem is there, and we need to fix it pronto.
Yes. Okay. All right, we're going to do a second one. For the second one, I didn't go all the way to the slides, but I have your story in a way that will make you raise money. So let's go.